Whenever it comes to investing in your favorite stocks on the stock market, okay, you want to continuously look at that stock and compare it to other companies that are in the sector. You want to do this because you want to see the strengths of your company versus the competitors, but also the weaknesses. The weaknesses are very important and something that I try to highlight very often because that's exactly what you want to do in investing. You want to make sure that the choices that you've made are correct. But with that being said, I found an amazing article called SoFi or Lending Club, which is the better stock to buy. This article was written by IP Banking Research, which you can find this article on Seeking Alpha, and I'll tell you guys more about that later, but I want to dive right into the details. So jumping right into it, Lending Club and SoFi actually have a lot in common. A couple things being that they're digital-first, multi-product banking institutions with fully chartered bank licenses. Now, SoFi is obviously a little bit different whenever it comes to multi-product, right? No one quite does what SoFi does with the amount of products that they have, but Lending Club also has the checking and savings accounts as well as the lending for, things like personal loans as well. And if I actually just push over here for a second, what you guys can see is a couple of select key metrics that this article actually points out. One of them being market cap, for example. The market caps are extremely different whenever it comes to Lending Club, which is, way cheaper than SoFi, yet whenever we look at other things like the amount of revenues, it's actually quite close. Net incomes were actually profitable on the Lending Club side, and the members are also very close as well. So why so cheap? But before I jump even deeper into that, I also wanted to point out the revenue growth sides, which is not what this article actually shows off, but it's something that I wanted to show off, which is the fact that SoFi grew by 57% year over year, whereas Lending Club grew 61% year over year on the revenue side. But one thing that I've noticed just on myself that's not actually in the article is the fact that Lending Club has 4 million members, almost the exact same as SoFi, but the difference is the ratio between financial services clients to actual lending clients, right? SoFi has about 4.5 times more financial service clients than lending clients, but yet they don't really bring in a lot of income. Whereas on Lending Club side, it's mainly loans and they bring in a ton of net interest income. And this is probably the exact reason for why we're not profitable at SoFi right now, is because we have so many members on our financial services side of things and not enough on our lending side, which could bring us in a net interest income, but we're actually negative whenever it comes to EBITDA, negative $54 million whenever it comes to our financial services side. And then on our lending platform, we're almost about the exact same, about 54 million, but on the positive side, which almost like negates the entire segment, and then we're just left over with the $20 million that we got from our technology platform that actually still continues to bring us into the positive. But that's only EBITDA. Like, that's a very select number where we get to take out all these extra expenses and say, oh, what's left over? But that's not even the real world, right? So whenever we actually look at our net losses, it's even lower than that. But there's so much more than just those sheer numbers, right? Those are just key metrics that he's pointed out. I mean, there's other things that is really hard to calculate, like brand awareness. Whenever you're talking about the brand, as strong as SoFi's, plastered all over SoFi Stadium, everyone knows them as long as they've seen any sport or concert or anything like this, right? That's massive brand awareness. Not a lot of people know Lending Club. It's much, much smaller than SoFi in the terms of who actually knows them, who uses them, who trusts them. And that sort of marketing strategy to build out this sort of brand is what actually creates this ecosystem of people that trust that brand, right? If you use SoFi for one product, you can easily cross-sell them into multiple other products if you've given them a good product, right? If they can actually know, like, and trust you, they'll come back for another product. So that's leading us down a path of high net losses that could easily wipe itself away as we get that member base that continues to get, cross-sold into other products. Lending Club, it's quite hard, right? If you're offering them unsecured personal loans, and yes, they'll come back for another unsecured personal loan, but they're not coming back for a home loan, or they're not coming back for insurance, or they're not coming back for this and that, right? That's the sort of problem. You almost have to keep acquiring new clients every single time that they want a new unsecured personal loan, and you're not quite getting any of those long-term benefits. But that's not the only key metric that they showed off in this article, right? You can also see this box right here where you could see a lot of interesting things. For example, originations, insanely high on Lending Club. Like, oh my gosh, right? But the percentage of retention is actually much lower. Then whenever we actually look at the diversification of their products, right, it's all personal loans, although the interest rate is sky high, 14.19% as of Q2. Unbelievable, right? But then in student loans, they don't have any. So although it's a much lower interest rate for us, and it's actually, hasn't been working for the last 2.5 years, that is coming back in Q1 of 2023, which is right around the corner, right? And then that should actually take off for us as well. So we're going to have two, very diversified different lending platforms that should, be a lot safer for us and for investors to trust, right? Lending Club, you're really, really risky with the high interest rates, lower FICO scores, lower percentage of retention, but you also get to to reap that benefit if people actually pay their bill. So it's super interesting how these numbers play out, right? Like go for the better deal, but potentially slower, more of a value investing sort of pick with Lending Club, or the more futuristic, like this could be the next stock of the next 10 to 15 years, higher growth, but maybe not quite as of a deal whenever you're looking at SoFi. Like it's super interesting, right? Like we're not even factoring in the idea that SoFi also has the bank technology of Galileo and Technesis that would also benefit, in the long run, in the very long run, they could be bigger than SoFi is today just on their own as subsidiaries. Just like it's written in the article, right? Strategically, they're going down such different paths, but yet the final destination is the same. If you're a banker looking at this stock, you're going to pick Lending Club. If you're a growth investor, more of a technology type investor, you're going to be picking SoFi. Lending Club is going after unsecured personal loans with high interest rates and no diversification. I am aware they take in deposits and checking accounts, but it's not quite nearly as successful as SoFi is doing. But like I said in the beginning, right, this article was actually found on Seeking Alpha, right? And I wanted to cover this, and I actually reached out to them. I said, hey, I love this platform. I love everything you guys do. Can I talk about this article? And they said, absolutely you can. And if you can actually bring some people over, we'll give you guys an amazing discount. And they're offering you guys 58% off on getting all these sorts of articles and everything that they do, whether that's technical analysis, quantitative analysis, fundamental analysis, everything. Seeking Alpha's got your back. I use them all the time. It's where I do a lot of my actual research. Whether you see my SoFi research or any other stock, a lot of it's actually done through Seeking Alpha. And I didn't even get a deal this good. So make sure you guys actually take advantage of this. Use their annual plan. I think it's like $99 for the entire year. Unbelievable. Go check that out. I got a referral link in the description down below. You'd also be supporting the channel. And make sure you guys like the video and subscribe down below if you want to see more financial content just like this. Another part in this article that I thought was super interesting was the fact that SoFi only recently became a bank. That's really important whenever you're looking at net interest margins and net interest incomes, because that is what's setting it. If they're not fully funding all of their loans through their bank yet, because we only recently saw Q2, should be Q3 where that's actually finalized. So we're going to see even more of that. And then let alone just the continued growth of deposits and everything along these lines as we start to, wind down on our warehouse facilities, which should save actual costs on funding. Now, if you don't know more about that, you can actually check it out. I think I made a video. It's going to be right up there that you can check that out and learn all about how SoFi is actually funding their loans. But aside from that, let's get into the next part. What I came to realize whenever reading this article is that both of these stocks are at very great values right now. People are worried about the macroeconomic environment, but it's really not actually having a problem whenever it comes to their default rates or anything like this. Yes, it's marginally increasing, but it's nothing as much as how much they're actually increasing whenever it comes to, the interest rates that they're matching it with. 14% for an unsecured personal loan on Lending Club side, like that is unbelievable. Lending Club favors those who are actually looking for a stock in the short term, right? Because they can still be looked at favorably, although they're a financial institution company, which is sort of out of favor. They are profitable, right? Which people really, really love. SoFi isn't profitable. It's more of the company that you're looking at if you're looking at, 5, 10, or even 15 years down the line. It'll really be on you to decide which out of these two stocks that you favor most, or none of them, or both of them. I mean, you can buy both of them if you want, right? But if you guys want to learn more about SoFi Technologies, make sure you guys check out this video right here. It'll teach you all about how they're actually funding their loans. But aside from that, guys, I'm out of here. Have a great day.